Good day, traders. I'm Adrian from BCR, and today I'll be bringing you the market analysis. Kicking off with our first pair, big economic data came out from both sides of the pond, with the euro-dollar turning bearish as Wall Street's decline dragged major indices lower, with the pair hitting a fresh weekly low near 1.046. Earlier, the ECB cut interest rates as expected, while the US released disappointing employment and inflation data. The euro-dollar rebounded during the Asian session, breaking a 4-day losing streak, trading near the 1.05 mark. The ECB is likely to continue rate cuts due to concerns about the Eurozone economy, with investors focusing on potential further easing in 2025, which could impact the euro and the euro-dollar. In contrast, though, the US dollar remains bullish as expectations rise that US policies under President-elect Trump could increase inflation and prompt the Federal Reserve to pause its rate cuts. The euro-dollar hovered between 1.05 and 1.052 during the Asian session, despite a slight rebound. The pair remains below the bearish 25-day simple moving average at 1.0546. Technical indicators provide mixed signals, with the RSI weak at 37.8. A clear break below the 1.05 mark could extend losses to 1.046 and ultimately 1.04. Conversely, resistance is set at 1.0546, with a breakout potentially targeting 1.0593 and 1.06. Next up, we've got the dollar yen. With the Fed and the Bank of Japan meeting coming up next week, this pair is going to be quite the roller coaster. The dollar yen recoveries was reversed, with the long positions capped around 152.6 and 152.7. Dovish comments from the Bank of Japan officials and strong US data supported the pair, maintaining a positive trend. The yen then gained some bullish momentum on Thursday's Asian session, halting a 3-day winning streak, and reached a 2-week high of 152.87. A slight weakening of the US dollar, driven by expectations of a Fed rate cut, provided some support to the yen, though its strength lacks clear catalysts and is limited to the diminishing prospects of a BOJ rate hike. Additionally, rising US Treasury bond yields and maintained market risk appetite may prevent yen strength from gaining traction. Technically, the midweek breakout above the 200-day moving average, near the 152 mark, signaled bullish momentum. The daily oscillator remained positive, suggesting upward bias, although the 152.7 level may act as a short-term resistance. A break above the 153 mark could target the 153.7 area, while a drop below the 152 might present buying opportunities around 151.55 and 151.5, with support at 151 and a possible fall to the 150 psychological level. Wrapping it up, we've got the Aussie US dollar. We've had incredibly strong data from both sides coming out, and that's got to be a big topic of discussion. On Thursday, the Aussie dollar rose briefly before retreating, initially boosted by weak US labor market data. The first-time jobless claims in the US hit a 2-month high, sparking speculation that the Federal Reserve may continue easing policy. The Aussie dollar had broken a 2-day losing streak and moved above the 0.64 mark. In Australia, mixed employment data showed a seasonally adjusted increase of 35,600 jobs in November alone, falling short of the expected 25,000, but bringing the total to 14.5 million. The employment rate also dropped to 3.9%, below the expected 4.2%. Meanwhile, the US Producer Price Index data showed a higher than expected inflation, suggesting slower Federal Reserve policy easing next year. However, this inflation data is unlikely to prevent interest rate cuts at the Fed's upcoming meeting. Technical analysis indicates a bearish bias for the Aussie dollar, as it is trading with a descending channel pattern, and the 14-day RSI remains below 50, signaling negative momentum. Immediate support is at the 0.6367 mark, with a break below this level potentially pushing the pair towards 0.6348. Resistance is seen at the 9-day moving average of 0.6422, and a breakout above could lead to a move toward the 0.65 mark. As always, guys, stay safe, stay smart, and good luck with your trades. Best of luck.